What's up, everyone? Welcome to day 7 of the daily recap. This would be 1 week since the start of the challenge, and I would say that today is a good day because we made $178 from the markets. It was a trade that happened at around 3:30 a.m. I had to wake up in the middle of the night while I was sleeping in order to just to trade that setup. So it was interesting because there were 3 setups that happened today during the I would say the morning Asian session. There was a one buy opportunity in the Euro US dollar and a sell opportunity at a USD Swiss franc. It was only these 2 trades happened concurrently at the same time, and I made profits off both of them. For the first one, Euro USD, I made $170. For the second one, I only made $8, and there's a reason for that. Price was consolidating once it touched my signals level, and so I had to get out as soon as possible. Another trade, there was a third trade that took place 30 minutes after the 2 trades. It was on Euro US dollar again. This time I missed the trade. Unfortunately, I missed a 3% gain to my account. It could have been a great winner because it moved up by more than 10 pips, but I missed the trade. And there's a reason why I missed the trade, and I'm gonna start to implement these new findings and new skills into my strategy next week. So we're gonna be able to capitalize and maximize our gains. So without further ado, let's jump straight into the review, and hope you enjoy this. Hey guys, this is the monitor of the trading monitor right here at MT4. This is where I usually do my executions. So if we look at today's trade, we did 2 trades. It was Tuesday that we took a $214 loss. It was an unintended loss because I didn't place my stop loss properly, and so I didn't actually place my stop loss and intake profit. So it was it was a stupid mistake, and I deserved this loss. So we improved and bettered our trades, and we took 2 trades today at Euro USD and the USD Swiss franc. We've net a $178 profit off these 2 trades, and I'm going to talk about 2 trades. I'm also going to be talking about how I missed one of the trades and the reason why I missed it. Okay, so let's get into the first one. This is Euro USD, the first trade I took, where we only made $8. So let's zoom into the 5-minute chart. So you see that this, let's start with this top blue line. Over here, price went down sharply, right? As you can see, price came all the way down aggressively, but then it also aggressively went up. So this goes to show that there was a shift in momentum in the Euro US dollar market, and when the sellers were stepping in, buyers were extremely heavy here, which causes the price to move up. So this means that the buyers were matching the sellers, and the buyers overtook the sellers, and because of that, prices just went up aggressively. So you see this defining V-shaped pattern. This is what I like to see. This is one of the setups I take. So with a indicator, we've been able to identify 1.11093 as an optimal level to enter. So since we know that a lot of buyers place their positions here, we believe that as prices come back down, they would retest this level, and further buying action will take place for those institutions who are defending their buying position down here. So it's hard to look at this chart, but from what you can see, prices barely went up, pulled back a little bit, and then sold off even more. So we're going to jump into the 5-minute chart to see what really happened. So as you can see, price was consolidating before it came down, and once it came down here, touches this level right here at around 110, this level right here, as you can see in my mouse. My signal has been alerted.
and I went straight to my computer, checked whether there was any breaking news or any upcoming news releases, realized there wasn't. So I decided to take a stab, a trade, a buy on this setup. So I took a buy, but then as you can see, prices were consolidating. And I just want to let you know when I decided to bail out on this trade. So I bought it right here. I see that price went up, but then fell back to the original level. Prices then went up again and then fell back to its original level. You see, this is a two try. These are two chances that I usually give a setup. I usually give a setup two chances to see whether it can go up or not. So I don't know if I haven't really have a plan for how to trade these type of setups, but under circumstances like these, it is best to under circumstances like this, it is best that we get out as soon as possible with as much profit as possible, even though we cannot, of course, cannot reach our full profit. So we see a bounce up, another bounce up, attempt to blow past this level. It blew past, but then went back down to the break-even level. And thing is, the reason why I continued, well, I'm going to tell you the results. Consolidated, right? Prices went up, it went back down, and then this is actually when I got out of the trade because I realized that this would be a losing trade. And it turns out that it was a losing trade, but I could have gone up a little higher just to squeeze up a little more profits. So the reason why I kept traditionally, usually what happens is that we expect an immediate bounce up from this level, from this buy signal line, because buyers are really strong there. And so if we see more than two um, double tops or double bottoms or two attempts to break a particular level but still failed, we would think we would assume that the buyers are that strong over there and we should get out and immediately as soon as possible. So bounced up once, didn't reach the 10 pip take profit, right? It did reach it. It did reach 10 pips. 10 pips was right here, so 10 pips is literally right at this level. It did reach, went back to the, retouched the break-even level. Usually what I would do is then I would place my stop loss 1 pip below this candle, and I would try to put my take profit on top of this level, but I did not. I just kept it at a 10 pip take profit, and the reason is because if we look over here, we see an uptrend, right? We see an uptrend. This channel, we started with a, it started right here. This higher low, higher high, it gave me an indicator that prices kind of want to go up. But my analysis was wrong again, and I realized that I should have gone out and followed and stuck with my rules more stringently. So next time, when situations like these happen, where if there's a buy signal, there are two resistant points before falling back to the break-even line. And if it was a sell signal, meaning prices, instead of coming down to the signal line, it went up towards the signal line, bounces twice, reaches back to the break-even level. Remember, bounces twice, and after every single bounce, it has to go back to its break-even level. If that happens, I need to get out immediately. So we managed to just snag a small profit from this trade, and so it was all right. But let's get to the next trade, the big one. All right, look at the 5-minute chart right here. Prices were coming up. It happened concurrently. while Euro USD was also trading. I traded Euro USD first, but then this happened minutes afterwards. So prices went up beyond this level, and then it closes below this level, and then shot past down for a good most of the 10 pip profit. What was the 10 pip profit? But you see, as prices went this down this way, I got out a lot earlier. I got out a lot earlier. And why did I do that? Well, I like to make sure that I get out before any strong turning points. As you can see right here, can you see this level? Prices went up, pulled back a little bit, then went back up. This is a strong support level, a very, very strong support level. And I didn't want my trades to interfere with the support level because there might be a chance that prices will continue to go up. So if we zoom into the 1 minute chart, prices went up, touches this level. I took my selling position at this level, went down. I saw that this is a strong support level. I didn't want to I didn't want to put myself at too much risk, and so with that, instead of a 10 pip profit, I moved my take profit up to this point at 0.96650, and so this gave us a range of around 7.4 pips. So 7.4 pips was my trade, and that was a winner. But as you can see, price continued to go down a little bit from here down towards 10 pips. So there was a 10 pip potential. However, I wasn't planning to gamble on this. But if you look closely, as price went down, it was a successful trade. But if I held too long, it would just blow past the original level, and it wouldn't be a successful trade. So it was good that we kept the trade as short as possible and getting out before this large green candle fucked everything up. So this was my second trade. Third trade, Euro USD. So this trade was happened at the second level down here. We zoom closely. Let's see. If we zoom closely right here, we can see that prices, when that price went down and touched this level, it quickly went up, right? It quickly went up to this level. And so if we draw the distance from here to here, it would be around the 10 pips. Yeah, it would be around 10 pips. Now, the issue is that I did not get into this trade. And there's a reason why I didn't get into this trade. The actual reason is because I actually missed the trade. When you see price came down from here, touched this level, and then it just went all the way up. The thing is, I could have gotten into the trade, but I set my notifications in a very unique way. So if we look at the Euro USD at this level, so this level right here, right? So this was my trading level. You see Euro USD at 1.10996. Ask is smaller than this level. Ask is lower than this level. Why? Because here's the thing. When you're trading, there's no fixed price. It's always a battle between the ask price and the bid price. The ask is higher, which is the lowest amount a seller is willing to sell for, and the bid is the lower level below the ask price. It is the highest price that buyers are willing to pay for, and there's always a tug of war between the ask and the sell price. So I wanted to make sure that since we are buying at the ask and selling at the bid, I want to make sure that ask is below this level. However, when remember this level, So this level was the trigger point, but I only got triggered right here, 1.10959. This was the level that I got the signal. And once I got the signal and turned on my computer just to enter the trade, the price has already shot up. The price has already shot up and I missed the trade. The issue with placing the making price below, like you want to set the ask price below this level, is to ensure that you're getting the best fill. However, from what I learned today, it's that even though when price got past went past below the signal line, sometimes the ask price will not be triggered. You see, if the ask price is not triggered, then there's going to be a huge problem, because price would just leave without you. So from now on, instead of making this level ask to be below this level, I'm just going to use the bid. When the bid is below this level, I know that this level is being touched. So instead of getting in with the market order, I'll get in with a limit order. I'll get in with a limit order at the same exact price my notification went off. So then I know exactly, what that point is and exactly where I need to get in for my trade. So this is a new insight for me that I've learned. And if indeed I did use that method, I would have made a $400 profit today, which is close to I would say a 5% gain in my overall count for the week. But anyways, I would say that this week has been a roller coaster, because first of all, I was expecting more trades. I was expecting better trades, but since we took a loss on Tuesday and also then take a win on Friday, 2 small wins on Friday, we managed to get back to the original starting level, but close to the starting level at $7,904. So so it's still a small profit. The end of week 1. I just think that we could do much better next week, and so we need to be patient. We need to learn how to discipline our minds. We also need to understand the dynamics of the market, and understand that all we have to do as traders is to manage risk. And then the key to winning and trading is managing risk. So this would be a relatively longer video. I hope you guys have the patience with me to follow this through. Thank you so much for being here. Please like, subscribe, comment on my video. Let me know how I can improve and better the quality and better my teaching. Last but not least, let me know if you have any questions. I'll be happy to help you guys out on your journey, and hope we can do this together. Thank you so much for being part of this journey of mine. Hope we see you soon.